Hello everyone, today we'll talk about taxes and deadweight laws. We'll quickly review consumer and producer surplus, then we'll move on to taxes and deadweight laws, and then we'll also talk about degree of deadweight losses. So to review, consumer surplus is the amount gained by the consumer from a purchase. So let's say I wanted to buy these shoes for $100 and I got to buy them for $80 instead. My surplus, my consumer surplus would be $20. Now instead, I wanted to sell these shoes for $100 and I got to sell them for 125. The producer surplus in this case would be $25. Consumer surplus is shown as the area underneath the demand curve, right up until that line that shows the price at which the good was bought at. Producer surplus, on the other hand, is the area above the supply curve, right up until that line that shows the price at which the good was sold at. Now that we're done with review, let's talk about taxes. Taxes are additional costs imposed on goods by the government, and then these collected taxes are then used for public goods. But how do taxes affect the supply and demand curve? If we wedge in the tax, with its length being the price of the tax, into our graph, this is our resulting graph. As you can see, consumer surplus and producer surplus both decrease, but now there's tax revenue that the government collects. But then there's also this gray area that occurs. This is what we call deadweight loss. Since there's a reduction in the quantity bought or sold after tax compared to when there was no tax, no one gets the benefit of those goods anymore, resulting in that gray area. Let's move on to some examples. Fun fact about me is I like to listen to Twice, and Twice is a K-pop girl group that they will have a concert on January 9th in Vancouver. I bring up the topic of concerts because they have a pretty elastic demand. In other words, you can go or not go depending on the price. So let's change our graph from earlier to show elastic demand, and it will look like so. As you can see, deadweight loss significantly increases because consumers have the option to not participate in the concert, meaning there's significantly less quantity demanded. And it also works if supply is elastic for the same reason. But let's take water in this case. Water is a necessity which has a pretty inelastic demand. Deadweight loss would be significantly smaller compared to before, since it doesn't matter if the price of water goes up because of tax, we still need water. And similarly, it works the same way if supply was inelastic.